South Africa's agricultural sector is showing remarkable resilience, with exports reaching a fresh record in 2025, and this despite rising trade tensions and shifting global policies. But while stronger commodity prices and regional demand are supporting growth, challenges around logistics, tariffs and market access remain firmly in focus. Wandile Sihlobo, Chief Economist at Agricultural Business Chamber, joins us now to unpack the latest Agbiz market viewpoint. Wandile, thank you so much for your time. As mentioned, the exports are hitting a record high despite global trade tensions. Let's talk about the key drivers behind this performance. Was it volumes, prices, or even market diversification finally paying off?
I would say it's the large volumes as well as the better commodity prices. Because, I mean, if you think about 2025, it was one of the La Nina rains year where we had an ample grain and the oilseeds harvest. And also did well in the fruit and the vegetables. And we saw that actually dominating on our exports, at least when we think about last year. But of course, we did see a little bit of a beef and a bit of wool also that dominated there. So the volumes were healthy. Okay. But also, I would say the demand out there in the world has also been fairly strong, and the logistics were much smoother than in the recent past.
And we'll get into the logistics and some of the challenges playing out there. I want us to look at what's been playing out on a regional front, right? The African continent now takes more than half of SA's agri-exports. How important has regional trade been in cushioning the sector against uncertainty in markets like the US?
I mean, look, when one looks at the share composition of our exports, sure, new record, $15.1 billion in 2025, but the share distribution of it has not changed that much. Okay. The African continent has always been the major driver of that, and then we have a bit, of course, then the Middle East and Asia, second largest market, the EU ever more important. And I would add the single country that we don't always lift up, but we put it as part of the world is the UK. The UK is also just as important because it accounts for around about 7 to 8% of our markets.
So spread across the board on that front. I want us to get into the US market in particular, which saw front loading during that 90-day tariff pause, followed by a drop in exports then in Q3 and Q4. With exemptions on products like the citrus products, I think oranges are included there, as well as AGOA being extended, but tariffs still at 30%. How are you making sense of the dynamics at play, and what should we expect when it comes to exports then within that market going into the 2026 season?
I think the US, when one looks at South Africa's farming exports to that market for 2025, we need to interpret them carefully with a bit of caution, because the headline number shows that we still exported about $500 million of agricultural products, which is down 3%. But really, when you narrow in those figures, you will see that, as you rightly point out, the first quarter and the second quarter, particularly second quarter, front loading at the time where we had the 90-day tariff pause, but at the same time we're harvesting citrus, we're able to take advantage of that period. But you look at Q3 and Q4, you realize that at Q3, our farming exports fell 11%, Q4 fell 39%, and in fact, they were at the lowest in the value in terms, I think we exported about 81 million US dollars of a product there. So my sense is that going into 2026 then, we may see much softer exports to the US, even with those exemption or modification to allow oranges, fruit juices, and the nuts. I think that the basket of the products still fall outside of that, and they still face 30% tariff. Because, I mean, AGOA would have made a minor difference, because without AGOA, you'll be at 33% tariffs. Now with AGOA, you're at 30%. Sentiment-wise, the extension helps, but if you're running a business and you're looking at 33 and the 30%, it doesn't make that much of a difference.
That also speaks to the importance on South Africa sealing a bilateral trade deal with the US soon, right?
I mean, that's something that will actually help, because then it will change these dynamics. Our preference is that a sweet spot in terms of tariffs under the current arrangement, where everyone is facing tariffs, would be anything between 10 and 15%. Of
Okay.
course, we would prefer something lower, but I think within 10 and 15%, we can be able to survive better in that US market. But with the current 30% tariffs, it's making life very difficult for many folks.
Let's look at BRICS for a second. There's been, a strong emphasis on deepening ties with countries like China and India. While China and SA are now moving to strengthen ties, that deal granting SA duty-free access to the Chinese market. A welcome move, right? But is it enough to calm concerns about downbeat intra-BRICS trade?
I mean, look, that is all still very early, because now we've signed a framework. But to actually reach a deal, we have to first go through the whole tariff book and get a sense of which tariff lines are we agreeing on what levels of tariffs, and which ones do we mark as sensitive. Because as much as the agricultural industry in South Africa is keen on China, we also know that China will ask for reciprocity. And of course, in our manufacturing and the auto industry, there's a whole range of risks that lie on that. So we have to be sensitive. And of course, it's a difficult one for a trade ministry, because some balancing of all of these trade-offs at some point will be necessary. But what's encouraging is that the conversation has started, because for me, it was worrying, because some of the BRICS members, like India, has been cutting trade deals for some time. I mean, if you just think about June last year to now, India has cut roughly 4 trade deals with many countries. The core thing then was about how can we improve intra-BRICS trade.
Yes.
So I think beyond China, we have to be talking to India, but we also have to be talking as a grouping of BRICS to say, a BRICS trade agreement, is this something that people are thinking about? What can it look like? And should it be discussed in some of the upcoming conferences?
Yeah, and is it beneficial for each nation within the alliance? Quickly, talk to me about port efficiencies. We do know about the operational failures over at the port of Cape Town. That has resulted in some of the fruit industry producers shedding about 350 million rand in costs. Yes, other plans were made, but, the importance there is around getting things to work.
Yeah, I mean, I think that the lessons has been learned now, and of course, the machinery and equipment is there in Cape Town. And in my conversations with the management at Transnet, is that they now see that all of the things that needs to be done to ensure that we don't land in that position in the past, they are underway. And I mean, that's not just their word, because at the end of the day, we do see the improvement in the port of across the Eastern Cape, KZN. We do see the improvement that they've been able to make on that side. And of course, then private sector working with Transnet, they are able to resolve those things. When we talk about this excellent performance of agriculture, it's actually on the basis of that very same point, that the ports are performing better than in the past. And I hope that the Port of Cape Town can also sustain some improvements going forward.
All right, let's leave it there. Wandile, thank you so much for your time and sharing your insights with us today. That was Agbiz Chief Economist Wandile Sihlobo.